putting this Lyft IPO in the context of the broader markets, right now, major indices are all up. Lyft is down. How much of an impact do you expect these IPOs to have on the market as the year continues? Because there's just a ton coming to market.
Right. Well, I think it's a reflection of where we are in the economic cycle and the stock market cycle that you do tend to have IPOs coming out at this point. You have a lot of M&A activity, et cetera. But I think it's going to be more of a headline event than a bottom line event. I think really the focus is more on Q1 earnings, which right now are expected to be off 2.7% year on year, which is half of an earnings recession. And then the guidance as to what's going to happen in the second quarter. Right now, we're expecting only the S&P to eke out a 0.7% advance. So in a sense, we're on the precipice of an earnings recession, possibly.
Bob, all kinds of data this morning, some negative retail data for February, though a bit more positive for January. The Chinese manufacturing data, though, positive. How much of that's playing into what we're seeing the indices overall do?
Oh, it's the main reason we've got the global markets up. China, that number was really important over. Remember, that we've been a slow slide down in the Chinese economic data for 6 months now. They are furiously stimulating their economy. I think that's the main reason that we're up so much today. The European economic numbers weren't so great. While our retail sales number was not great, remember the January revision was notably to the upside. And you can now argue that maybe we're messing up somehow. And obviously you can drive a truck through these numbers. Sam knows this. You know the 90% confidence interval in these economic numbers. They're terrible. So the revisions of these are huge on a monthly basis. So I'm reasonably optimistic the retail sales numbers will also be revised upward again in February as well. I'm more concerned about the whole Lyft situation because the whole sentiment for the market right now, part of it is based on the idea that all of these tech unicorns are going to come at very, very high valuations. And Lyft is very effectively challenging that right now. We were concerned about this. We sat on this panel, the four of us, just last week, and I said, excuse me, $15 billion in the last valuation for Lyft, and they want to come at $23 billion? Investors are not fools. And they saw that. We saw what happened here.
Anyway.
Well, I think that's a concern. Now, what I think is a reasonable question now is, does this mean that other IPOs are going to have trouble? It certainly means they're going to be cautious on the pricing. And that's good news for the people who want to buy down the road.
Although, I mean, we can have IPOs underperform, but if China takes off again, that's going to make this seem like a second story.
Absolutely, yes. Because right now, the feeling is that we're heading, in my opinion, more toward a soft landing than we are a recession. I published my Yield Conundrum article this morning that said of the last 7 times that we've had a flat or an inverted yield curve, we ended up with the Fed cutting rates 7 of 7 times, but only 4 economic recessions. So we can worry about a recession, but actually most times we don't have to worry too much.
Do you think the Fed could cut rates this year?
I think it's certainly a possibility. I mean, take a look at what happened in 1995, which was one of those years in which we had a flat yield curve. 0.28 was the spread between the 10 and 2 year. And then by July of that year, after having ended their rate tightening in early February, July, they started cutting. So there's a possibility that could be this year as well.